Earnings mover Cleveland-Cliffs tumbling today after missing first quarter estimates. It's the biggest drop since February of 2021. The company announcing a $1.5 billion share buyback, saying it's a better use of capital than M&A at current valuations. Joining us now in an exclusive interview is Cleveland-Cliffs CEO Lourenco Goncalves. Lourenco, great to have you. So you talked about $600 million plus that you spent in the quarter. Average price, buying back stock, average price of $18.79 a share. It's cheaper now. You're saying you're aggressively going after that, and that you're not doing any M&A or looking at any M&A that would prevent you from buying back these shares. But what does that mean, right? You're looking for deals with stock. Do you still have enough liquidity to do any M&A that you might want to do?
Good afternoon, John. Always a pleasure speaking with you. Yeah, we have the liquidity to pursue further buybacks. We need to continue to return capital to the shareholders. That's our commitment. And yeah, the market will give me the opportunity to do that. The current stock price, the closing price today, is below the average of the acquisitions that we made with the $1 billion buyback. So, yeah, we will continue to do that.
Well, more broadly, give us your take on the macro environment and its impact on you, both from a labor perspective and then also from an end market demand perspective. We see Texas Instruments, it's higher after hours today, but it's been talking about overall demand weakness in areas like industrial that I would think might affect the demand for some of what you're putting out as well.
Look, in our specific business, the biggest problem is not the macro as a whole, is the perception of the macro. We started the quarter, if you recall, with people believing that we would have 3 cuts of rates by the Fed. And then during the quarter, we went to no cuts. Now there's talk even about further rate increase. And that creates a situation that clients get paralyzed, particularly in distribution, in service centers. And these are the guys that move a lot of volume, and they can go in and out. Other sectors, like automotive, they don't have the luxury to do that because they have plants to run. So we were victims of this uncertainty, particularly in January and February. Things did not improve in March from the perception standpoint, but then these clients were so low in inventory that they had no option, they had to buy. So March was our best month of the quarter, and April so far so good. So things are improving.
Yeah, you talked a lot about strength in the auto sector. You're the largest steel maker supplying into the auto industry. And you also talked about the recovery we're starting to see in steel prices, too. So I wonder, we've got more sanctions on some Russian-made steel. And now we've got talk from the Biden administration here in the U.S. about more tariffs on some imported steel, namely from China. Is this good for you and your business?
Yeah, look, it's not only good for us and for our business, but it's necessary. We continue to fight overcapacity in the world. We continue to fight unfair trade into the United States. And it's not just Russia or just China. It's a combination of everybody. And particularly with a landing ground that was created in Mexico that puts steel from virtually everywhere in the world inside the USMCA. So we need to stop this thing that using Mexico as a dumping ground, a transshipment ground for reaching the market in the United States. That's our biggest problem at this point.
Okay, I want to go back to M&A for a minute. Are you still in the market? Would you still be in the market for U.S. steel if this deal with Nippon is scuttled? And I ask that knowing that last month you made a couple comments that got my attention here. On Bloomberg, you said that you discussed with the U.S. government prior to making the offer that you wanted to make sure there'd be a clear path, to clear antitrust. And you also talked about, or at least my colleague, David Faber, talked about you talking about the fact that the union is just not going to negotiate with Nippon. So we know that's going through regulatory review right now. Is your expectation that that deal is not going to get through?
I don't believe that deal will close. What I told you on December 18, Morgan, around this time of the day, So after market closed on the day the deal was announced, on December 18, 2023, is still valid today. I don't believe that that deal will close. The USW will not cut a deal with Nippon Steel. And at this point, it would be better for all the players, all the participants in this botched deal to have the President Biden in an act of mercy to put them out of their misery. But if they don't, the deal will linger around for a few more months or maybe a year, and the USW will not cut the deal, and then the deal will just fail.